Welcome to the Well Off Podcast, where the goal is to motivate, inspire, and share success principles. I'm your host, George Almasri. Abdellah Majd has been selling real estate for 8 years and investing for 10. He currently operates a boutique brokerage in Hamilton with plans to franchise several locations. And on this episode, we discuss kicking off his real estate investments with his family in 2013, how he bought 3 duplexes in 2 years, venturing into commercial multifamily, and buying real estate in Florida. He's been really active since he started investing a few years ago and has accumulated a pretty sizable portfolio. So I think you guys are going to really appreciate learning about how he was able to do that and how he was able to leverage family and other people to grow his portfolio. So I hope you enjoy the content. Make sure to share this with a friend or family member and leave us a review on whatever platform you're listening on. That would be greatly appreciated. If you want to connect with me to talk about commercial multifamily, anything above 5 units, I'd be more than happy to share with you, to analyze deals together, to help you find off-market deals, that sort of thing. So make sure to reach out to me on Instagram, WellOffX, or on my website, welloff.ca. You can book a call there. And I'm always happy to just brainstorm with you and to share ideas. Enjoy the episode. This episode was brought to you by Mortgage Dawn with Go Pineapple. All right, I'm here with Abdellah. Thank you for coming by today.
Yeah, George, appreciate it, man. Happy to be on and look forward to chatting here today.
Yeah, for sure. I'll pick your brain a little bit. I know you're heavily involved in the investment community. You're constantly working with investors. Let's start off by talking about your childhood. So, where did you grow up? Tell me a bit about some memories you have.
Yeah, the background story. Probably not prototypical, but I was born in Morocco. So my entire family's from Morocco, both sides, mom and dad's side. So we came to Canada in the late 80s, pit stop in Montreal just because of the Francophone thing, Morocco being a French-speaking country. So we were there about another 3 years, got to Hamilton 92, 93. So been here or in Hamilton since the age of 7, so grade 2. It's been 30 years, went by like nothing. And then, went to nearby elementary school there, Lisgar to Hampton, which doesn't exist anymore. That's a subdivision now, to Sherwood. Graduated from there on the East Hamilton Mountain. And then came university time, went to Mac for a year. That's about as far as I got into the post-secondary education. One thing led to another. I transitioned to the hospitality industry. So I worked at the Keg Steakhouse for the next 11 years up until 5.5 years ago. Be almost 6 years in the spring. So I got, just fast forward through all that, did everything under the sun, except management at the restaurant there. Just wasn't worth the time, just kind of looking at, return, on a return there. So, and then in 2016 is when I got my real estate license. Failed the third exam 3 times, just to go to show you that how much all that stuff really matters. And it was a different structure back then, right? That's when you were writing 3 exams, getting licensed, and then doing your 3 electives. So finally, found my way through all that. Got licensed in end of March in 2016. Only interviewed with Keller Williams at the time. Out in Hamilton at Complete Realty. So same thing. We were in like a small bungalow, kind of like what you guys have here, transitionary type of vent or office, and then eventually got down into a nice big space on Cannon Street East. So I was with Keller Williams for the first 6 years of my career. Didn't interview with any other brokerages. Kind of one thing led to another, some mutual contacts, and that was kind of the end of that. Learned obviously a ton over there. Met some great agents, great people that I'm still in touch with today. And then just to kind of take it back a little bit, where the personal investment side of things started was in 2013. Just it was a family approach. Pulled some funds together, ended up buying 3 duplexes in a matter of 2 years. Spreading out the 5% rule as best as we could back then. Obviously, measures were a little bit different. So yeah, I ended up 6 doors on the mountain near your classic 800, 900,000 square foot bungalow.
Eight or 900, not thousand.
Yeah, sorry, 100. Yeah,
Yeah.
apologies. Yeah, 900 to 1,000 square foot. 2 bed up, 2 to 3 bed up, 2 bed down, 1 to 2 bed down. Still one of the best investments in my opinion. Hamilton. I mean, there's different layers to it now with the type of zoning that allows for more density there. So 6 doors, and then we took a break and did some other type of investing for a couple of years. Didn't go our way. Right back to to investing we got, and then as COVID kind of started, right before COVID, actually, we bought a 6-plex, and then we sprinkled in a couple more entry level properties, a duplex, a single family that we got dirt cheap. That's 4x'd since we bought it.
Off market?
No, to be honest, it was just the market at the time. I think it was 2017, maybe 20. So you remember, right? 2016, fair housing plan. That's when stuff started going nuts. Then died back down. Q1, Q2, 2017. But yeah, we ended up picking up like 144,000 right off Ottawa Street North, down Crown Point, right? So very popular neighborhood there, and we bought a duplex around the corner from there as well. So accumulated doors, no JV, just no JV stuff at the time, just wasn't necessary, right? Just obviously,
how many
price points cost.
How many brothers do you have?
I have 2 brothers and a sister.
Okay, so you were doing it together?
Yeah,
family?
Yeah, for the most part, and then just kind of grew the equity from there and started redeploying capital. And then about 3 years ago is when we finally jumped into the multi-family space. We bought side-by-side triplexes that ended up couldn't have the titles merged just because of when it was severed. It crossed this this date and year where it could never merge, which is unheard of when it comes to land registry. So we've bird the one side of it, the other side still untouched. And then obviously during COVID, just like with everybody, refinanced, HELOCs left, right, and center. And then we dove into, we transitioned into the commercial world. So last couple of years, we've closed on 2 buildings. So out towards the London area. One of them 23 units. The most recent one was at 18 units, so we're just in the middle of repositioning it now.
Again, with your siblings.
Yeah, with my brother, and on these last big ones, we've partnered up with a couple close friends, mortgage brokers, that own the Synergy Mortgage Group out in Hamilton. So, longtime buddies, just only get into business with people that I can trust, like family. So yeah, it kind of happened like super quick. Deal got brought to us from the partner, and then we all, just made too much sense. And then one thing led to another, and we ended up securing another building. And then in the meantime, in the background, started acquiring some properties down in Florida, Naples to be exact. Purchased a condo there. Right smack dab in the middle of COVID, when things really right before things got super hectic there, and price values rising, or in property values rising, and now that condo now is worth 40% more than what we paid for it, and then led us to Naples Park, which is just a bit north of where we are now. And in the middle of executing some luxury Airbnbs. So it kind of reminds me of Ancaster a few years ago. Everything's just getting, smashed down and built up. Crazy amenities, like beaches right there, and a lot of higher end amenities in the vicinity. So we pivoted, decided to sell our first one, and now we've got 2 more behind it. So try to pull back some capital and redeploy between that and the building, and just to kind of help things along, and just so we can get kind of closer to another bigger refinance to to then set up our next purchase. But yeah, like last year's definitely been a blur. So Keller Williams ended up unfortunately leaving about 15 months ago. So it's only been like a year and change. Again, it was a great start to my career, and then when Revel Realty came along, proposed a business model where you're able to essentially operate brokerages in a kind of a model where there's 22 locations now across Ontario, right? There's just signing like people that obviously are super immersed in their markets, right? They're not bringing people from outside that city to run them. It's kind of people that are embedded into those stats. So one thing led to another. I've been operating a brokerage now for just over, like I said, a year and a bit, and just on the verge of franchising that location, and then signing on to do a couple more. So it's been like I said, been a bit of a blur.
Sounds like you have a lot going on.
Yeah, it's a lot going on, but it's the only way I know how to do things, right? So
let's just go back a little bit here.
Yeah.
So you start off at the Keg.
Yes.
Completely different industry. So my first job was at a restaurant. I worked at Jack Astor's for a bit. But I only worked there for like 9 months, and I was in high school and everything, and I just realized I never want to be in the restaurant industry.
Yeah, not for everybody.
Definitely not for me. So how do you you shift over and then you start growing at a massive pace? And I think so. Your brother's a contractor, right? He's got a construction company.
Operates a construction company. Under our kind of bigger umbrella, but yeah, operates.
So was he
partner? Yeah.
Was he pushing the growth of your portfolio, or was this you, or was it collective? Was everyone pitching in?
Yeah, it was collective. Like everything's done. The construction thing's very new. Like, it's only been that company's only been around for maybe a year now, right? So, but before we're just learning, right? Like there wasn't any certain way we were trying to do things. Like I've always pushed the envelope in my career, like out of the gate, and learning and taking risks where a lot of people probably weren't. And then, I had no reason to leave Keller Williams. And when this opportunity came along, which I knew would require a lot of time and money and effort. So I mean, I think we're both driven in the same way.
You and your brother?
Yeah, and in our circle too, right? Our partners Josh and Jake as well. Like we're not making any wild decisions out there. Everything's calculated to an extent, but I think our brains are all wired the same way for the most part. We know what a portfolio or what assets have to look like to really live the life you want to live by the time you're ready to retire and pass on to your family, right? Look, at the end of the day, that to me, that's what it all comes down to, right? It's just building for the next generation. Obviously, you're gonna enjoy it a little bit right now, or later on. For us specifically, we're just still immersed in the growth phase right now, right? It's consistently on an incline, but going back to your question, George, yeah, I think it was collective. It's me boots on the ground now with the construction side, and kind of marrying those two. It makes my job a lot easier. Obviously, we all speak the same language. We're all trying to.
Was that French or Arabic?
Yeah, exactly. Well, yeah, French, Arabic. That's where it ends now, or at the moment. So, I think like it's a push internally. It's a push from our direct inner circle as well. Like I said, it's just you see all sides of it, from the construction side, the real estate side, even the mortgage side, which is obviously super helpful with our partners there as well. So I'd say it's collective for sure. The way we've grown, how fast we've grown everything, I don't think you can really have anybody that's sitting on the sidelines or too timid to do anything. So, if you know it better than most, if you surround yourself with people that are wired the same way, you're usually going to get to where you need to go, right, fairly quickly. So,
yeah. So you've gotten into so many different things, including moving into Florida. First of all, why did you go there? Why did you start looking at Florida?
I was never down there. They're friends of ours have owned there for forever, and last 2-3 years, or always kind of like, you guys should buy down here. It's growing, and I knew enough about Naples. It's old money. It's just a well-run area and community. Lack of deficiencies down there with infrastructure, et cetera. So one thing led to another. They were going down there quite a bit, and then they ended up buying some newer construction down there. And I think my brother had been down there during COVID. I was still up here, and kind of just one thing led to another. One of them popped on the market. We had some capital readily available. Did the homework on the rental market there, and the occupancy rates and all that, and obviously it was nice.
Who does that usually? Is that your responsibility?
Yeah, no, we had a realtor down there that was helping us with all that. We've since kind of pivoted to another representative that's more in tune in the investment circle. So yeah, but I mean, you got to get help locally, right? I don't know what a rental rate for a 20 or a 1,200 square foot condo looks like, right? I'm not the type of guy to guess. I'd rather just lean on a local professional, and that's what we did. And everything worked out. We ended up, not to say that it wasn't, as a foreign investor, it was getting tough to get a mortgage down there. I ended up closing with hard money, refinanced right away. Just a quick funny story. We ended up, this is when the border crossings were closed, and the mortgage commitment had to be signed on American soil.
Yeah.
And the embassies were shut down.
Yeah.
And we just couldn't push any longer. We had everything in place. We didn't want to shake anything up, so we actually flew to Chicago. Left my house at 6 a.m. Was back home at 6 p.m. So flew down there, into O'Hare, met a notary at a local McDonald's. Didn't have time to get a cheeseburger, and signed everything off, and we're right back on a plane a few hours later, just to kind of give you a sense of what you had to do with this cross-border investing at that specific time. Mm-hmm. And now, so we ended up purchasing it for like $300. It got up to touching $6 during the height of the market. Obviously, it's scaled right back now. The States is in the same position that we are with the mortgage climate. So, and it's worth about $500,000 now. But, in the high season, it's bringing in around $6,000 a month, January, February, March, April. And then obviously, it does its thing throughout the summer and picks back up in the fall. So we've got it rented right now. So it was just, again, it was a draw from, my brother being down there, and then our friend, our buddies are like, hey, you should dump some money here. And then up here in Hamilton, it was ridiculous, right? You knew what you were paying to get into a duplex conversion. You're paying over $900, mm-hmm. right? And then having to sink another $250,000 or $500,000 quad project, or whatever the case may be, right? So again, it was just about shifting the focus for a bit, and then one thing led to another. We got another large piece of land that we were trying to develop down there that we ended up actually just pulling shoot on. But now we have, that condo as a constant, and then those other Airbnbs that are still a few months away from being complete. So it's just kind of, right place, right time. But then mindset is like, what are we going to do up here? Like our money isn't going nearly as far as it used to be. And luckily we had, boots on the ground down there and some sort of background to what that would look like. And it's ended up being a pretty solid investment thus far. Mm-hmm. Yeah.
Cool. Yeah. So you've got your Florida stuff. You've got the 23 unit and the 18 unit buildings.
Yes.
So have you had to focus a lot on those buildings as well? How are you guys doing all these different things? Like, how do you split your focus onto?
Yeah, it's funny. I think about this stuff all the time. We're just solid kind of teamwork, essentially, right? We have the construction side now, well taken care of, right? Because that's the nature of that position. Obviously I have, I do market research on pricing and rents. The first one was was just a bit of a sweetheart deal, the VTB that we got on it. So one of our partners quarterbacked that one, kind of already had it locked up.
Which one are you talking about? The
The
23?
23, yeah. That was the first purchase. Yeah, that's in Aylmer. So just southwest of London.
Yeah.
It's funny because they're like almost identical in terms of like one's obviously a little bit bigger than the other because it's got 5 additional units, but very similar in look, age, lot size. Some redevelopment opportunity there down the road, especially with the 18 unit one, just talking to the county on behalf of the property managers a little while ago. So that one, yeah, we ended up getting like a giant VTB on it at a very favorable rate. We've turned over, I think, 3, 4, 5 units. So NOI is just steadily climbing. And then the owner actually stayed on. The previous owner stayed on. I mean, he's holding the majority of the mortgage, but he stayed on and is doing essentially free property management there. That was kind of all part of the deal, right? Just kind of obviously emotionally attached to it.
So he's still a part of...
Still very day-to-day active.
One of the main misconceptions about alternative or B lenders is that it's only for subprime clients who cannot qualify at the bank, but that's far from the truth. Alternative lenders allow higher borrowing capacity along with intuitive mortgage features that not only allow applicants to borrow at a higher amount, save money, and also it allows you to draw on your equity without touching an existing low interest rate mortgage. This allows more flexibility and also long-term money savings. I would love to connect with you for all your mortgage-related questions. You can reach me at 647-961-3281, or you can find me on Instagram and Facebook at The Mortgage Dawn.
So does he still own a piece of the...
No, just he's got him. He holds the...
So he's kind of like the super.
Yeah.
Yeah.
Yeah, but I mean, he lives not too far away. It's funny, none of us have met him, but one of our partners. But we get all the correspondence, and he's just kind of luck of the draw how drawn he is to the building, and it's almost like his legacy type thing. We kind of joke around about it all the time. And then, yeah, the 18-unit building, we actually just closed on end of May. So June, July, August, September. So we're in October. It's been 5 months. So we got we got pretty fortunate there. We closed with 3 vacant units. And then one was about a month away from vacating. I think they ended up vacating a little earlier than we had expected, which was cool for us. And then there was a property management company that was kind of already attached to the building loosely from a deal previous that had fallen through, and did our due diligence there, back and forth, interviews, talking about, how many doors, where, what the process looks like. That definitely did end up working out, and another story, I think, for another day, and trying to contract out her handyman like a lawyer. It was absolute insanity. But we ended up finding another property management company who have been absolutely excellent, really moving things along with the renovation. And then layered onto that, we're going, we're going through the CMHC MLI Select Energy Efficiency Program. So, low flow plumbing and plumbing fixtures, LED lighting, heat pumps, HRV system, right, and just elevating the efficiency side of it, while meeting the audit that we have to abide by in order to achieve that large refinance. So that one's definitely like just kind of comparing the one to the other one's, like the 23 is super hands off, just because of a little bit of a novelty there with with Buddy staying on, and this one's it's a lot more day to day, and just kind of learning about the different aspects. Right, there's just so many components owning a building, and waste management and security systems, and just outside of your standard mortgage, insurance, tax type thing. Right, there's just a lot of contracts that are linked to a building. But so far so good. I don't knock on wood when I see it, but it's the refinance is lining up pretty smoothly. We've already got a new lease there. 3 of them are right behind it, and then we've got confirmation of 4 more units coming vacant as well. So
great.
gets us about 50% turned over. Just kind of
will that put you in line for a refi at that point?
Yeah, we could. We could definitely. I think that's the idea with the last conversation we had. Us four is probably getting through not nearly the whole building and then going for the refi, and that's the beauty of it, right? This is from a kind of an overview. That's a huge difference between the res side and the comm side, right? Comm side is capital expenditures, and it's driven by your NOI, right?
Comp side comparables for those that don't speak realtor talk.
Yeah, exactly. Right. So it's just I should remember like back in the day, and I've always I was selling commercial stuff. Luckily, that was referred to me out of the gate like 7-8 years when I first started. So I've always had, always learned and try to educate myself on that side, and now kind of just remembering what the stuff that I learned and looking at these giant segmented refinances, right? Like, you slowly but surely, every time a tenant turns over, you're getting rewarded for every level of upside that comes that you're creating in the building, right? Rents go up. This is upgraded. There's value that's created, right? That is monetary.
So on that, with these buildings, are you doing like a full gut generally of these units when they turn over? Because your brother has a construction company, so obviously you get good pricing on this stuff. Or are you just doing a lipstick generally?
So with the 23 unit one, nothing about taking it to the studs. It's been more, a surface level kind of cosmetic lift. These ones are definitely not being stripped back. Like I said, these buildings are they're from 1970s. Like they're not, you're not dealing with some of the stuff in Hamilton that were built
from 1880.
Yeah, right. I have one off market right now. Yeah, exactly. That was built in the late 1800s. So that's the beauty of these things, right? Is the service and mechanical side of it is not super dated, so we're not having to go into behind the walls. But yeah, it's all been superficial for lack of a better term, for sure. Yeah. We've lucked out in that sense.
Cool. If we move on to something which you've kind of already touched on a little bit, but pivoting. So you obviously work with a lot of investors as a realtor. That's kind of from my understanding, your main focus, right? Working with investors.
Yes.
So how have you found that your clients have had to shift either with their strategy or their mindset or whatever else?
Yeah, no, it's a great topic to touch on, George. So, giving you an answer from all angles. Just even talking to a client of mine, my client Rob, just talking to him on the way up here about some stuff that we're, some seminars we're trying to partner on, and he's like, hey, and when you have a sec, I'd love to, set some time aside to chat about what the next step is, how to fight during these wild times with interest rates, right? And it's like, that's just a prime example of that one took a while. So I had helped him with 3 your standard entry level duplex conversions on the mountain. They all worked out great for him. Everybody was happy, but obviously he's not a type of guy that doesn't want to cash flow. So to take it back for a sec, Hamilton has put you in a position as an investor now that it's much, much easier to increase density. Okay, so all your C and D zoning, take Sturton, for example, R1, allows up to 4 units. You guys hit it out of the park on the planning side. So that's like, if that didn't exist, to be honest, I don't know what this conversation would look like. I don't, the pivoting, like some people can't just go from, hey, I bought a triplex, I want to refinance it and buy a 12plex, right? We know as much as it is easier to qualify on the commercial side, it requires a lot more capital, right? And loan to values and legacy tenants and how those rents affect your debt coverage and all that. So it's a variety of different things. Like where I was going with that personal example is like, okay, he wanted nothing to do with getting into another project, but I think it's just it's time first and foremost. People really not even digesting the rates. I mean, if you haven't digested the rates yet, that's probably your problem at this point. Like it's, there's just nothing else to do. Everybody got to roll with the punches. We're all feeling the hurt. So I think it's just funny because you asked that. Now it's just time. Now people are like, okay, well, I don't want my money sitting. It's just the same old adage, right? I don't want my money sitting in an account or doing God knows what in a mutual fund. I need to put it to work on the real estate side. So, there's that. There's people that are just absolutely not. Crossed many paths this year where people are like, hey, I have 400, 500, 600 grand liquid. What should I do? We have the consult. Here you are. Are you going to come out and see properties? I got some stuff lined up for us. People are taking a fresh step back. To me, with the pivot and the shift in mindset really has to come with the ability to do so, right? Like I don't want to say it and everybody that's listening thinks, oh, you just have to. No, there's capital. There's a lot that goes to it, right? Like even your borrowing power and whatnot. So. I would say this is a variety, but the people that are positioned, it's come pretty simple, right? Like we've kind of gone back and reanalyzed what they own. Okay, before you take your money and go buy a fresh parcel and go try to complete this giant burr, what can we add on right now to help you keep the money in your pocket that you have and use the capital out of your equity? Obviously, it's all calculated and make sure cash flow is not getting.
You're talking about like adding a unit or a garden suite,
exactly,
or whatever,
right? So taking your original, like I know a lot of guys that own 4 or 5 properties and don't know what to do with them because A, they don't care, and B, they're probably just not educated about the giant changes that have come to Hamilton zoning, right? So that's where that's the shift from our end in terms of educating and helping the execution is, okay, if you have this on this lot and this lot allows for 4 units and you have the garage and you have an empty basement, okay, upgrade your current portfolio before you go and add on to it, right? Because at the end of the day, it's all about, right, everybody wants the doors. They want to accumulate doors, right? So I think that's a big part of it too, is just using your existing portfolio, to scale. And then, guys that haven't touched their homes or their investment properties, right? I know guys that are, liquidating single family stuff or, negative cash flow stuff and be like, okay, well, now I've gathered these funds. I have no idea what to do with them. Most of the time we're trying to reposition them into the commercial world, right? The more and more I talk to people, boots on the ground, day to day, I have this conversation with 90% now, I think, of the investors. Even a guy I was talking to a couple days ago who told me he had 150, 200 grand. And it depends how you structure the deal too. Like 200 grand might get you very far. If you structure it well, there's a VTB and there's a clear exit strategy. It get you a lot further than you think, right? So it really it's case by case. Like I said, from the top, it's guys that just investors in general that needed time just to digest the entire landscape as opposed to just the mortgage, the interest rates. Guys that thought they would get in but are completely stepping out. We have people that we're trying to amplify their current portfolio to scale into something larger scale. Right, and then it's from a real estate perspective. I think there's patience is a virtue right now, right? Like everybody that I talk to, it's not you as a realtor too, George. I think it's things aren't gravy out there, and it's a grind, right? So I'd say any piece of advice is using this time to educate the investors, right? Like there is a lull here. There's a lot of guys that would love to, a lot of guys and gals that would love to do something, but just don't have that switch in them to go ahead. So I think educating right now and keeping people informed as to how your local markets are transitioning is huge. Like I said, in Hamilton, it's a year ago they rezoned 80,000 parcels, and it's made it incredibly easier to have these conversations with investors. So
yeah. Do you find that, I know you kind of touched on it, but do you feel like a lot of people are taking a step back or feeling like the market's going to, drop substantially. Yeah,
Right.
and they'll scoop up deals then, or maybe they're just like, hey, I don't want to do anything right now. I want to wait, see what happens with the rates.
100%.
Compared to 2 years ago
Yeah.
when everybody was interested in
Yes.
getting something, right?
100%, my friend. It's I mentioned it earlier on in the podcast. It's I've had a credible amount of people do that. Like, sorry, I know we got to stay that constant distance, but yeah, take a big step forward. I'm super excited. I'm seeing properties, and then take a a step back.
Do you think a lot of people feel like the market's going to come down?
Yeah. I don't think a lot of people. I think a fraction of the population. This is the problem as well. I think that needs to be talked about. Is there are deals out there, 100%. I'm going to talk locally in Hamilton. I'm going to talk about Vaughan or Woodbridge or markets that I've never sold in. In Hamilton, if you were to run a search right now for multi-unit residential, and you're like, wow, that's been on the market for X amount of time, I can name you probably 5 off the top of my head. If they're not gutted and don't need private financing, like a Sturton, which, again, great project, the tenants are the giant issue. Yeah. People, there's not a lot of talk. Oh, there's great deals. There is great deals, for sure. Off-market, on-market, there are a lot of great deals. Majority of the on-market deals that are live right now all have the same problem. You have legacy tenants. Good luck getting them out.
Yeah.
Right?
Yeah, but by just to clarify to anyone listening, legacy tenants that have been there for 15, 20 years that are paying $700 a month or $800 a month.
Yeah. And even 5 to 7 years ago, right?
Yeah.
Knowing what the rental rates have done in Hamilton, especially in surrounding year over year for the last 5-6 years, even somebody that signed a lease in 2017 probably looks a lot different, right? So, the people this is it. Just it's way different being a realtor and an investor, and seeing it day to day and looking at the inventory and what stuff sells for, as opposed to just kind of wishing and hoping. Like, to me, if you're going to ask me, are we going to see any more of a drop in prices? I'd say absolutely not. Absolutely. There are still some price points out there that I'm like, oh wow, this thing went for X. Yeah. Right. So
that is interesting. Like that triplex and fourplex kind of property in Hamilton. Let's say 2 years ago, those things were going at least for $800,000.
Yeah. 100%.
Right. And they probably needed to be gutted at that point.
Yeah.
But now you're seeing them, they're substantially less.
Yes. So say, in terms of where they were at the apex versus now, 100%. I just walked one yesterday on East 24th. That's fully gutted. Distressed sale, unfortunately.
Fully gutted, to the studs.
Yeah. Exactly. Sorry, exposed studs.
Yeah.
Everything's been electrical and plumbing are gone for the most part as well. But it's got an underpinning permit attached to it, which, for those who don't know, is very expensive to dig down, especially in a home of that age. But it has a laneway. It's got the setbacks to do the largest basically footprint of an ADU you can get. It's
is
a great
it a 2-story.
Yeah, it was originally 1.5 stories, and then there's years and years ago they had added, let's say, another 600 square feet. They've doubled the main floor square footage by way of an addition. Great project. Obviously needs easy just for the triplex itself. Probably looking at $400,000. I know that sounds crazy, but if you're actually running the math at a $500,000 entry, you are right there. Mm-hmm. So just kind of give you an example. There's stuff there, right? Cost of borrowing is a lot of these projects need the private financing, and you know what it is out there, right? You're getting absolutely hammered at 9, 10, 11%, and people
for a first.
Yeah, for a first, right? And people are out there charging seconds, right, at 13, 14, 15 for the reno. So you gotta be careful there, right? You gotta be careful, but it's just
well, even a HELOC right now, like a home equity line of credit.
Yeah, don't get me started on HELOCs.
If you're prime plus 0.5%, we're like almost 8%.
Yeah,
right?
Yeah, we have a considerable amount by way of HELOCs, and that's just our strategy and just to keep it revolving, we're most of them are sitting in the mid 7s. So that's you know, I'm sure you can do the math on what that runs, right, with all these down payments we've forked out in the last few years. But going back to what you were saying there, George, the 3-4 units, they've come down considerably. But again, it's time to get the tenants out, right? That could take, if you somehow build it in during your closing period and you can work with the seller, those are unicorns, right? Not a lot of sellers like, I'm going to guarantee you that, you know, if you're moving in here, then you know what you have to do. Give me your N12, sign the affidavit, so on and so forth. So, like from the top of the market to now, incredibly more affordable. Obviously, cost of construction has gone up, right? So to me, that's just more or less of a wash from that perspective. But you know, in conclusion to that question, the majority of the good deals out there on the residential side, just majority of them are going to have that tenant situation linked to them, right? Where you really need to strategize around it and make sure that you're not getting caught absorbing, you know, assuming tenants that you thought were going to leave, and now you've got a year and a half battle on your hands with the LTV.
Yeah.
Right.
Yeah.
So,
well, that's the nice thing about Florida too, right? You don't have those same issues.
Yeah, and other parts of Canada, right? So, you know, we're starting to kind of dip our toes out east, out west, and you know, seeing what that looks like. You know, price point and just the whole look of it, but that'll be a big difference, right? Is how the tenant laws are dealt with in other provinces. For
sure. So we covered a lot of ground. Anything you feel like we missed that you want to touch on?
No. I think we've covered everything. A little bit of a background, you know, talking about change in density and feasibility in Hamilton. I don't know. I like, to me, it just comes down to risk level, right? Numbers haven't changed in terms of the way they're calculated. As funny as that may sound, it's just, I'm going to go on a limb and say if people out there are thinking there's another, you know, 10% drop coming, I'd say don't hold your breath. You know, just what I'm seeing there, and you got to keep in mind, not everybody's taking their inventory to market, right? So there's a lot of people that are holding back until hopefully these rates start coming down, right?
When the market rebounds, like if it's a rental property or something and you can hold it, then why are you going to sell it now?
Yeah, why sell it and lose, you know, tens of thousands of dollars if all these projections are right with rate cuts next year, because you're negative cash flow 300. But I mean, like, can't judge. There are some people, like we got rid of, you know, 3 or 4 properties in the middle of all this BS, just to kind of regather,
stabilize, right?
Yeah, stabilize, regather capital, and then you know, put it where it's right. So, but I'd say in a nutshell, like, for anybody out there that has a substantial, you know, not even substantial portfolio, you know, 4, 5, 6 properties, you know, duplexes, whatever, even single family, like, I would urge you, especially if you're in the Hamilton market. But even surrounding municipalities, you know, some parts of Niagara are allowing the accessory dwelling units. Brantford, you know, Hamilton's kind of the hub. So, you know, look at your portfolio first before you think I have to go get approved for a new mortgage, right? Right. Stay with the bank, have that mindset of let's grow what I have, and then I would look outside of my portfolio at this point in time.
Yeah, for sure. Just to finish things off, how do people reach you? And obviously you've touched on this, but just to recap the services you're providing. Yeah.
So, from in terms of services, so outside of brokerage operation, you know, I deal with everything residential, commercial, and multis, but yeah, I would say 80%, 90% of the clientele that I deal with are investor oriented to some degree. So where I can be reached pretty easy, the Majd Realty Group, MAJD Realty Group, on Instagram, on Facebook, and then on TikTok, Revel Hamilton Central, and Facebook Revel Hamilton Central, which is my current brokerage. So pretty, and then we can connect from there, and then I'll start throwing out phone numbers. Abdellah Majd realty.com as well as my phone's attached to my hip, so it's never an issue getting a hold of me.
Yeah, I see you got the smartwatch too, the Apple Watch.
Oh, exactly. This is the only reason honestly I got it for is when that shut off, or if I'm too far away, I can just look down. That's honestly primarily the only reason I got it.
Always getting messages, emails.
Yeah, exactly.
24/7.
Exactly, man. Exactly. So.
Yeah, thanks for coming by.
George, I appreciate it.
Look forward to catching up with you again soon.
Yeah, awesome. Thanks, George.
Thanks for listening to this episode of the Well Off Podcast. If you enjoy the show, then I'd really appreciate if you left us a review on iTunes and let us know your thoughts. In order for us to get a larger audience, it's really important to have reviews, so your support is extremely appreciated. And also, don't forget to share the podcast with your friends and family. Until next time, I'm George Almasri. Have a great day.